So I am going to go ahead in a moment and just start our presentation. Let me introduce myself and say my name is Jessica Keegan. I'm from the Office of Economic Empowerment. I'll explain what that is in a moment. I use she, her pronouns, and I'm going to just introduce some things before we start this webinar. So like I said, I'll let you know what the OEE, as we call it, is, and just some disclosures about the fact that we are on Zoom webinar. So the Office of Economic Empowerment is a department of the state treasury. So we are part state office. We also operate partially as a nonprofit. And the reason why you're seeing this webinar today is because our goal is to make sure that all people of the Commonwealth and beyond have access to financial education. And in turn, that'll close the race and gender wage gap, promote racial equity, college affordably, and promote STEM education. So that is why we were here with this webinar today. So you may have noticed that this is a Zoom webinar rather than a chat. So this will be recorded. Many of you have to leave early or jump off. Do not worry, this recording will be uploaded, so then I can send you the link so you can refer to it later as well. Just to let you know as well, you can use the chat to ask questions and the Q&A preferably to ask questions. The Q&A will be available throughout the webinar. Unfortunately, you are not able to turn on your video or unmute yourself, but that's okay. We have folks in the chat here to answer your questions as well. So feel free to ask things through the webinar. And then at the end, we will have some designated time to go through any questions you might have. There will also be a post survey just so we can make sure that you like this sort of content. And we are going to be polling for some information for some more Money Talk Tuesdays that you'd like to see in the new year. So if you have opinions on that, definitely let us know, and you can find that in the post survey. So thank you again for your patience, everybody. We appreciate it so much. We know that this is a very, very exciting topic that people have been looking forward to. So if you'd like this sort of thing, definitely check out our further events at the link on the screen, and I'll send it in the chat as well. And if you have any questions, definitely let us know. But I will stop sharing my screen and introduce LaQuisa so that we can dive into the meat of the conversation to make sure that we have all of the questions go. So thank you. Go ahead, LaQuisa.
All right, thank you very much. I wish this room had better lighting so you guys could see me more, but my name is LaQuisa Burke, and I'm the Community Engagement Officer for Massachusetts Housing Partnership. And today I'm going to talk to you all about the One Mortgage program, and I'll sprinkle in a few details about the One Plus Boston, and we'll also talk about the Mass Dreams program that's also available through MHP. And the reason why our program was created is because we want to be able to help as many first-time home buyers as possible. So essentially, hopefully you guys enjoy this presentation today. I'm going to go ahead and share my screens, and just let me know if you can see my presentation, and we'll be good to go.
We can see your presentation.
All righty, I'm going to start the slideshow. All right, everybody can see that pretty good? Sounds good. Thank you, Jessica. So again, today I'm going to talk to you all about the One Mortgage program. Again, the One Mortgage is a program that was created to help first-time home buyers, people who fall below a certain income guideline. They can qualify for our particular program, and you can use our program to buy anywhere throughout the state of Massachusetts. So with the regular One Mortgage, you can use anywhere throughout the state. With the One Plus Boston program, which is an enhancement on the regular One Mortgage product, the One Plus Boston is for Boston purchases only. So you must be living in Boston. Your employer could be in Boston. You've gotten displaced from Boston within the last few years after 2020. You may be able to use this to come back into the city to be able to purchase your first home. Some of the benefits that come along with the One Mortgage program is, number one, is that you're always going to receive an interest rate discount. And considering the fact that interest rates are extremely high right now, it's really important to make sure that you're getting all the discounts that you can get no matter where you go, right? We also offer a very low down payment system. We also have no private mortgage insurance attached to our program, or sometimes they might call it mortgage insurance. And then for certain borrowers that fall below a certain income guideline, they can receive financial assistance from MHP. And I'll talk a little bit more about what that actually looks like. So with the one mortgage, like I said, you're always going to receive an interest rate discount. So with the one mortgage, you're always going to receive an interest rate discount of 30 points. And the one mortgage, again, you can use anywhere throughout the state of Massachusetts, and you'll be privy to receiving this discount. With the One Plus Boston program, you'll receive either a 50-point discount or a 100-point discount. And we're hoping to increase this in the future, but right now this is still where it stands. So for example, if you're looking at the one mortgage and you're moving anywhere in the state of Massachusetts, let's say today's rate is a 6%. The one mortgage will come in around a 5.75%. And then if you looked at the One Plus Boston, you will receive a 50-point discount. That comes off of that one mortgage rate here, the 5.75. So that would be even a lower rate for if you decided to buy in Boston. And then that 100-point discount is actually an entire point off from the 5.75 to 4.75. So that gives you like a whole percentage point off of your interest rate, which definitely does help. So this is our interest rate discount. Again, everybody will receive this interest rate discount if they do qualify for the one mortgage program. And Jessica, I'm not sure if are we answering questions in the chat? Are they unmuting themselves, or should I just keep on going?
I will let you know when we have questions. Hopefully folks will use the Q&A function to ask their questions. That way everybody will be able to see and answer them. So if there is something relevant to the slide, I'll let you know at the end of the slide, so that way we can address that question right then and there. But for now, we're good and you can continue. All right, sounds good. And everybody, you can hear me just fine, right? Sometimes I can talk loud in the office, and we have people, here. So to make sure I'm not talking too loud. But okay, so if we're looking at our down payment system, if you want to buy a condo, single, 2-family home, you could buy up to a 3-family home with the one mortgage. Unfortunately, we do not allow you to buy a 4-family or a 6-family or anything like that. Our maximum amount of house that you can purchase would be a 3-family. You can, if you want to buy a condo, single or 2-family, it's a 3% down, where 1.5% of that has to be your own funds. The other 1.5% could come from a gift from a family member, a down payment assistance program. There's a ton of stuff out here with the city. And in addition, we also have the Mass Dreams program, which is what everybody's been talking about. Is the Mass Dreams money still available? Yes, the Mass Dreams money is still available. And you can use the Mass Dreams money to add in that extra 1.5% that you will need to purchase to make up that entire 3%. If you want to buy a 3-family home, it's a 5% down, where 3% has to be from your own funds. The other 2% could come from a down payment assistance program. Again, you can use it with the Mass Dreams program. The city of Boston has a lot of programs that's out there. Keep in mind, down payment can be very town specific. So if you're buying in like Lawrence or Lynn, they might say, if you use our down payment, you need to be buying in our town, something like that. But if you have any questions about down payment, you can always find that on our website. We try to keep up to date with it as much as possible. But again, you can use the Mass Dreams funds to make up that other 1.5% or that 2%. With the one mortgage, you will never have to pay private mortgage insurance. And what is private mortgage insurance? Basically, private mortgage insurance is added on to your loan when, number one, you might come in with a very low credit score. You might not be putting down enough money. The lender basically considers you to be a higher risk borrower. So therefore, they will add on this extra fee that you will pay in addition to your actual mortgage. So if you come in saying, hey, I only want to pay $1,800 with my taxes and insurance included and everything, now you have private mortgage insurance that can cost you anywhere from, $50, maybe $100, or, into a couple of hundreds of dollars a month. It all basically is determined by the lender if you will pay private mortgage insurance or not. But the great thing about the one mortgage is that there's no private mortgage insurance actually attached to our program, which is a great thing.
even though you're only putting down as low as that 3% down payment, you still wouldn't have to pay PMI. Again, the PMI is there as a protection for the lender in case you were to default on your loan. But with the one mortgage, we actually cover that for you. It's called a loan loss reserve. We put aside 1% of your loan to make sure in case you were to default on a loan, and that's what the lender would actually use. So that's why there's no private mortgage insurance attached to our program. So you'll never pay for this, which is another great benefit of having the one mortgage program.
LaQuisa, before you move on, could I ask you a question?
Yeah, sure.
Somebody in the chat mentioned, since you mentioned Mass Dreams Fund, someone said that they thought that the Massachusetts Dreams Funds were suspended recently. Would you be able to let us know the updates on that?
Okay, so we have been trying to put out as much information as possible to let you know that MHP, Massachusetts Housing Partnership, still has access to the Mass Dreams Fund. So if people are looking to access the Mass Dreams Funds, the only program that they're going to be able to access it through will be the One Mortgage or the One Plus Boston program. Otherwise, you won't be able to access the funds. Mass Housing had funds, but they are actually out of funds right now. And the difference, if you say, oh, well, what's the difference between MHP and Mass Housing? Basically, MHP look at us as more like a boutique program that actually, focuses on a certain niche, right? So we work with people that are lower to moderate income, whereas in Mass Housing, it's going to work with people that have more of a higher income. Some of their programs are a lot different than ours. We don't have PMI. Their programs do have mortgage insurance attached, but it does include certain benefits if you do have the mortgage insurance. So, but they also have a ton of different products. Whereas in MHP, we just have the one mortgage program. So we have the one mortgage and we have the One Plus Boston program. And then we just came out with Mass Dreams. So if you are looking to access Mass Dreams, you will have to use the One or the One Plus Boston program. And we do have money. We have money until like next year. So, we're hoping that people continue to apply. Tell your friends that we still have money. I know that there's a lot of things out there saying, oh, their money is all out. And a lot of people get us confused with Mass Housing, but we are not Mass Housing. We are Mass Housing Partnership. So hopefully that clears it all up.
Thanks for elaborating on that, LaQuisa. We have some more questions about Mass Dreams, but I'll just circle those at the end so we can get back on track with this presentation. And to do that, I will ask you a question that's more on topic with the slide we were just talking about,
Sure.
Which is, what are the AMI limits for the one mortgage?
So we will get into that. I actually, so you know what? I could pull that up for you guys real quick. We're gonna get into it anyway. So we're gonna get into it. So let me finish this piece of the presentation, and then when we get to the income limits, I'll actually pull up the actual income limits in the area median income, what we're actually looking at, and then you guys can make your determination from there. And I'll make sure that it's kind of Boston specific. Sounds good?
Thank you.
All right. So another benefit of the one mortgage program is that for certain borrowers that fall below a certain income guideline, they could qualify for what's called subsidy funding from MHP. And what the subsidy funding does is that it helps to lower the person's payments for the first 7 years of their home ownership process. So let's say in year 1 through 4, we might give you $200 a month to go towards your mortgage. In year 5, we would start to kind of wean you off of that process to get you into year 8, which you should have been paying essentially in year 1, but you got a discount for the first 7 years because we gave you these extra funds. The best thing about receiving the subsidy funding is that it helps to increase your purchasing power. So let's say that you might have only qualified for a home for $300,000. Now, because you receive subsidy funding, it helps to increase that purchasing power. You might be able to qualify for something that's like $350,000. So the subsidy is good to have if you do qualify for it. And usually people that fall below the 80% area median income will actually qualify for that. But, again, you know, this is a good product to be able to have if you do qualify. Unfortunately, it is a 0% interest loan that you do have to pay back upon selling it or refinancing of the home. But if you could not pay that back, we do have, you know, a whole nother system that goes along with that if you couldn't pay it back at that particular time, and we would just work with you in regards to that. Also, each borrower can receive up to about $12,000 in assistance. And we're hoping to, again, increase this in the future to be able to help more borrowers be able to get into home ownership, because the more down payment and the more assistance that people can get, it makes it easier for them within their first couple of years of home ownership. So we had a question earlier about household income limits, and how our program works is going to be based upon the community that you live in, want to live in, and how many people you actually have in your household size. So what I'm going to do is I'm going to just kind of just jump out for a minute, and I'm going to pull up our income guidelines for you guys, just so you guys can see what those actually look like. Here we go. And you can also find this on our website as well. And I'm going to go ahead and share this with you guys. Where is it? All right. Can you see the screen, Jessica? Can you guys see these income limits?
Yes, we can. You might want to click that top square button just to zoom in a little bit, though.
Okay, hold on. How's that?
Great.
All right. So again, it's going to be based on how our program works. It's going to be based upon what community you want to live in and how many people you actually have in your household size. So if we just go down to Suffolk County, because we're in Boston, everybody wants to know about Boston. So we'll go to Suffolk County. And as you can see, if you want to live in any of these particular communities in Boston, for two people, you cannot make more than $112,000. If you made underneath this, then you will qualify. If you made over this, even at $113,000, you would not qualify, because the incomes is very strict and they don't make any exceptions in regards to this. So if you're over this amount by any amount, then they will not qualify you. This 80, and this is the 100% income limit. This is the max that we would go. So as long as you're under this 100% area median income or income limit, then we would qualify you for our program. At right here at this 80% income limit, this is usually the area where people will start to receive subsidy funding. And just about in Boston alone, about 65% of our borrowers actually receive subsidy funding, which means that we love to give out money. And a lot of people that are lower to moderate income borrower actually qualify for these funds, which definitely helps them. But let's say if we decide we want to move to Brockton, for instance, as you can see, for a household of two, that income limit drops. It goes to $89,000. So you have to be underneath this 100% income limit in order to qualify for these particular towns. So if I decided I wanted to live in Kingston, even though it's still under Plymouth County, it has different income limits. It goes up for two people, goes back up to $112,000. So this is going to change from area to area based upon where you want to live. All of the towns are listed on this income limit sheet, and you can always refer to this when you're trying to decide on, you know, do I qualify for this? Am I under the income limit? You can always stop to take a look at this income sheet. And this is
Great.
also
Thank
on
you
our
so much,
website.
Lucreza.
Excuse me?
Would you be able to, I know that we have a lot of folks from around different areas of the state, and I remember previously someone who managed a lot of housing authorities and things from the Berkshires wanted to see if there was content on that. So would you be able to reshare and go over Berkshire County if you are
Yeah,
able to?
sure. No worries. We can do that. So let's go up to Berkshire.
Thanks, Lisa.
Yeah, no worry. So here we go. The Berkshire counties is right here. These are all of the towns. Some of these towns I never even heard of, like Peru. I didn't even know we had a town named Peru, and Otis. I've never heard of these towns, but if these are the towns that you would like to live in Berkshire County, as you can see, that income limit does drop dramatically from like Suffolk County, right? Like it's $75,000 for two people. And then if you want to live in these towns, it only goes up to 76. So determining on like how much you make, what you can afford, you know, this is what you can happen if you go to Berkshire County. Does that answer their questions, Jessica?
Great. Thank you so much.
You're most welcome. I know everybody's like, what about my town? You know what I mean? I'll definitely send this out to Jessica. She might even already have it. She can share it out with all the people that registered for the information session today. Right? So we'll go ahead and hop back into this. All right, so income limits, we got that squared, right? It's going to be based on the community that you want to live in, how many people you have in your household. Also, like say if you decide like, hey, you know, I'm really over income for 2 people, but me and my spouse or me and my partner, we're having a baby. The baby actually does count. If this is some information that you divulge to your loan officer, then the baby will count. So then therefore your income will go from 2 people to 3 people. They most likely will ask you for some kind of documentation proving that you're pregnant. So you just can't just say it and then not provide proof, but definitely the baby will count if you're having a baby. So if you're teeter-tottering on the brink of if you're able to qualify or not, definitely keep that part in mind if that is your situation. We also have an asset test that's associated with our program, which just means that you can't have more than $75,000 in assets. And what we count towards your assets would be anything you're saving in your checking accounts, any stocks and bonds, any gifted money. That's like my relatives gave me some money. Gifts of equity, which would be I'm buying this house that's worth $400,000. I'm only going to pay $300,000 for it. You have $100,000 in equity, therefore you would not qualify based on this asset test because of that $100,000 that you have in that equity. So keep that in mind if you are buying something that is worth more than what you're actually paying for it. Also, any investments that you may have will be counted, and also any land that you may own could be counted towards your asset test. Some of the things that do not count would be most retirement accounts, where we do count Roth IRAs, and we just count Roth IRAs just because they're already pre-tax and they're liquidatable, you have access to them. We also do not count college savings plans. So I'm not sure if people still do college savings plans, but if they do, that is something else that we would not count towards the assets. So we do have this asset test. You just want to make sure you're under the $75,000. I mean, I don't have $75,000 lying around, so I'm pretty sure a lot of us would qualify for this, including myself. To be a first-time home buyer just means that you have not owned a home within the last 3 years. We do make some exceptions to the rule. So if anybody is in a sticky situation with like a partner, they're breaking up and they was living with a partner and all that kinds of stuff, just kind of like run it by us. And if there's any exceptions that need to be made in regards to the first-time home buyer requirement, we'll be happy to do that. But as long as you haven't had your name on title for a home in the last 3 years, then you will qualify. So if I sold my home today in 2022, in 2025, I could become a first-time home buyer again, which is pretty awesome. So you can kind of fall in and out of first-time home buyers.
Great. And I just launched a poll that I know we have a variety of people in the audience asking where they fall in these limits. So that way we can make sure to get that content out to where it needs to. So I can go ahead in just a moment and end this poll and share the results so that you can see them too and see where we are in the audience. So here we are. It seems like the majority of the people have not owned a home, some within the last 3 years and some over 3 years ago. So we have a good mix of people, especially in the target audience for the One Mortgage program. So thank you for this brief interlude. I'll stop sharing this poll and you can go ahead and take it away after that.
That's a pretty awesome poll. So for all the homeowners out there, if you know somebody that doesn't own a home, definitely tell them about our program, because if you bought, years ago, then you might know of like the private mortgage insurance, what that actually looks like. Back then there wasn't as much help as there is now. So if people are really looking to buy, definitely have them take a look at the One Mortgage, and considering that they can only ask Master Dreams through us right now at this moment. So definitely have them take a look at our program. But just to go on for qualifications. So credit score minimum. So as long as a borrower meets our minimum credit score, then they could qualify for our program. So if they want a condo or a single, it's a 640 credit score. And if they want a 2 or a 3 family, it's a 660 credit score. And if somebody just cannot generate a credit score, we do have an alternative way of actually looking at credit, which would be, collecting 12 months of their rental history. It has to be documented through like bank statements or like a Zelle or a Venmo, something that you've been doing every single month. I know there's all kinds of ways that people pay their rent now, but we would collect 12 months of rental history, 12 months of utility bills, different things of that nature in order to qualify you in a non-traditional way. If you have a very low credit score, then we just highly recommend to just try to get your credit score up to at least these minimums so that you can actually qualify and benefit from all of the benefits of the One Mortgage program. Okay, and to talk about our Mass Dreams program, which is our new down payment assistance and closing cost assistance program. Again, you must use the One Mortgage program or the One Plus Boston program in order to qualify. Mass Housing is out of funding, so you do not go to Mass Housing looking for Mass Dream funds. You're not going to find them at Mass Housing. Their funds are depleted. The good thing about the Mass Dreams is that it is a grant, it's non-taxable, so you don't have to claim this on your taxes. The only caveat is that you must live in one of the 29 communities that have been, vetted to be able to apply for this program. But if you live in one of these 29 communities, you can purchase your home in any town in the state of Massachusetts. So you don't have to just purchase within these 29 communities. As long as you live or have residency in these communities, and you can use our program, apply for the Mass Dreams, and use it to purchase anywhere throughout the state. Also, we do have a pre-eligibility questionnaire that we do ask people to fill out. You can find it here at My Mass Home, down payment assistance, Mass Dreams eligibility. As a matter of fact, I'll even click on this just so you guys can kind of take a look and see what it looks like. It's a very short, stop, I'll share this. It's a very, here it goes. Short questionnaire that we just ask you to fill out. And this is what it actually looks like. And so it's going to ask you if you're a first-time home buyer. You say yes. It says, are you planning to purchase a property that you serve as your primary residency? That just means I'm going to live on the property. Yes. Do you currently reside in one of the eligible communities? So it has a list of the communities here. So these are a list of the communities that are eligible to participate in the Mass Dreams program. And they're going to ask you your income. And then it's also going to ask you, where do you want to live? So it's going to use your income based upon where you want to live, how many people you have in your household. You click submit, and at the end it'll say yes, you qualify for it. You want to take that letter over to your lender, and the lender could get you qualified, one of the Mass Dreams lenders. So we have a specific list of lenders that will participated in the Mass Dreams program. So they will be able to process all your documents, get you qualified for the Mass Dreams and either the One or the One Plus Boston program. So that's just like an easy way of taking a look at that. Okay. All right, so do we have any questions about Mass Dreams and how it actually works? And because I know I get a lot of questions about the Mass Dreams program.
We have gotten a few Q&As about Mass Dreams, about things like the communities and the funding, but luckily Suzanne has been jumping on all of those.
Okay,
so if you feel like there needs to be something up, we will definitely let you know. But thank you, Suzanne, also from Massachusetts Housing Partnership, who is answering a lot of these questions.
Yep, Suzanne is our business development manager. She's also my manager. So I appreciate her coming on today, definitely fielding questions. So if she's answering them, thank you so much, Suzanne. I really appreciate your help. It's been a chaotic morning, so I appreciate that. Some additional programs that are also offered by MHP is that for people that hold Section 8 vouchers, that they may be able to use their voucher to be able to participate in buying a home with their voucher. The only caveat is that their housing authority must be participating in the voucher to homeownership program. And there's only a few housing authorities at the moment that's participating. We hope to get some information on our website shortly in regards to who those local housing authorities are that is participating in it. And we also have 4 lenders right now that will currently assist you with your Section 8 application when you're trying to apply and use the voucher towards your home ownership. They only allow you to use the voucher for 15 years, but they will give you a 30-year mortgage. So at year 15, you would either be willing to take over the rest of the 15 years on your own and give up the voucher, or if you're completely disabled, I believe they'll let you keep it for life. So there's different situations going on there, but this is an option for people that would like to buy. And also, I know that we have a lot of homeowners on right now. A lot of people fell behind on their mortgage during like COVID when, you know, they had the people weren't paying the rent moratorium was in place and it was a whole bunch of chaos going on. So a lot of people fell behind during this time. We do have a program that is assisting homeowners right now. It's called the Homeowners Assistance Fund. It's also called the HAF program, HAF. And this is offering up to about $50,000 in assistance. And if somebody is like more than $50,000 behind, they should still apply for this particular side of the program because there could be extra funding that could be available that they could like be a resource to. So definitely, if anybody's falling behind during COVID, please apply for this homeowners assistance fund to try to get yourself back on track. And this is where we're located in downtown Boston. I know we have a lot of homeowners on here. So I appreciate all of our homeowners being able to support the new first-time home buyers that are here. And thank you for coming to get this information from us, because since MHP is such a smaller company than Mass Housing, we do a lot of word of mouth, and a lot of people hear about us from their friend or their auntie or their cousin or whoever. And we really appreciate all the good words and efforts that people put forth with letting people know about this program. So if you haven't heard about the program, now you have, and hopefully you'll be able to share it with more people in the future. This is all of our contact information here. And if they have any questions in the future, they can reach out at onemortgage@mhp.net. Maybe more me or any of my colleagues will most likely answer any questions. And if you're a new homeowner or a new home buyer, you might see me in your first time home buyers class if you haven't taken your first time home buyers class yet. So, and there's a couple more pieces that go into this particular program. But for today, I just wanted to kind of keep it light and bright for you guys. And I hope that you enjoyed the presentation today. So I'm happy to like answer questions for you and be here as a resource.
Thank you so much, LaQuisa. That was so valuable. I learned a lot too, and that's fantastic. But we do still have some time left in this presentation book. So we're happy to take any questions right now. I see a few folks leaving. Don't worry, we have some time. If you have questions, we're happy to answer them. And I can start with one of the questions in the Q&A, if that works with you, LaQuisa.
Okay, sounds good.
Great. Okay. Lily asked, can this program help someone with a disability now renting through Mass Housing but wish to buy their own first home?
So basically what somebody can afford is going to be based on their income, right? So if you're disabled and you have reliable income, then I would say, yeah, you can totally use our program to be able to apply, but it's about what you're going to be able to afford with what you bring in on your disability, right? Because that's what the bank is going to qualify you for. So I'm not saying that you can't qualify for something, but you may not qualify for like a $400,000 house. Maybe you would. I don't know, your financial situation, but that is what you bring in every month is going to determine what the bank is actually going to be willing to actually give to you. So yes, you could use our program to apply even if you're on disability.
Great. Thank you so much for answering that question. We have a few people asking about Section 8 vouchers. Hopefully we'll get things like that in the chat. If people do have other questions, please do let us know. We will try to post all of these links. I'll try to compile them in our email review as well. Just to reiterate that this session is being recorded, so I am happy to send out a link to the recording once that's up later. And if you feel like you would like these slides, email the Money Talk email, which I'll post again in the chat, and we can reach out on that front. Okay, we do have some more questions from the chat. How do you determine your income, as in, are there an amount of tax years you need to use, and get back on track on that front?
So usually the lender will have there's a whole list of documents that they will request to look at your income. So they're gonna ask for your pay stubs. They're gonna ask for your taxes for like at least 2 years of your taxes. They will ask you for your credit report. They'll take a look at your credit report. They're gonna take a look at your debt, how much income you got coming in. Pretty much any income that you have coming in, they're gonna look at that and they're gonna add that in as part of the pie. So whatever you have coming in, whatever you tell the lender that you have coming in, that's what they're going to add into your income.
Great. Thank you so much. Okay, let's see. Does anybody else have any other questions? We're getting a lot of people in the chat asking about repeat sessions for this, or if there's any
I'm happy to come back. It was a success, then more than happy. It's our goal to make sure that we're offering this a couple of times a year. So if Jessica wants to do it once a quarter, once a month, whatever, if you guys don't get tired of me, I'll totally come back.
I think this just shows how great of a presentation this is, because you are so in demand right now, Lisa. So I am going to reiterate that anybody who registered, which means that if you are in this Zoom right now, will receive a link to the recording. If you're watching this on something like Facebook, then we'll make sure that it is also up on the Office of Economic Empowerment YouTube channel, which you can definitely check out later. So just to reiterate, it will be recorded. You will be able to see this, so that way you can go back and like discreetly look at all of the income requirements and things like that if you get a little bit confused. We did have a question asking about having good lenders. Does Massachusetts Housing Partnership have preferred lenders that work with the One Mortgage program?
Yeah, so for each part of our program, the One Plus Boston, and Mass Dreams, there's a specific list of lenders that is participating in that side of the program. We have over 40 lenders, and I want to say in Mass Dreams alone, over 30 of them are participating in the Mass Dreams program. So you should have a pretty easy time finding one of our lenders. They all are very good. We just highly recommend, when you're vetting your lenders, to speak to at least 3 lenders before deciding on who to use. You can go with 2 bigger banks and a smaller bank. Call 2 smaller banks and a bigger bank. Call a bank you know, a bank you don't know. You want to make sure that you're able to have great conversations with that loan officer, that they're responsive, that they're not just trying to push you into a product that you have no idea what it is, because that can happen. If you don't qualify for the One Mortgage, then that's fine. Put me in another product. But if I'm specifically coming to you and saying, hey, I would like the One Mortgage, can you assist me? Then that's a product that they should be putting you in. But if you're seeing that you're running into any issues or you're running into roadblocks with any of our lenders, feel free to reach out to us, and we'll be happy to try to help you recommend a new lender for you, or help you work through this particular issue that you might be having with your lender, or this particular lender, because it might not just be you. It could be like other people that could be going through this as well. We just don't know about it unless you guys say something. So again, vetting at least 3 of the lenders, having your conversations before you let them run your paperwork is going to be key.
Thank you so much, LaQuisa. We have another question about the Mass Dreams program. Does it help families in PSH, even if they live in a community outside of the 29 ARPA communities? Or are there other programs that could help with down payment outside of Mass Dreams if you are not part of those 29 communities?
So what's PSH?
PSH is, it looks like Suzanne may have jumped in on that.
Okay.
But if you did ask a question and you would like to clarify what PSHs, you can definitely feel free to anonymously follow that up in the chat.
So the thing is, like with the one mortgage program, that you wouldn't be able to use it outside of the state. So if you did try to go outside of the state, you wouldn't be able to use it, but you can use it in anywhere inside of Massachusetts. But for the Mass Dreams program, that you have to be living in one of those 29 communities. You have to be in one of those 29 communities in order to access the funds to be able to use it anywhere else throughout the state. Does that answer your question?
That does make sense. Hopefully we'll receive a little bit more clear. PSH is permanent supportive housing. Not quite sure what that is.
Yeah, I'm not quite sure. So I wouldn't be able to have like any recommendation in regards to that. But again, when you're looking at trying to get a mortgage, it's all going to be based on how much income you have. So if you have like, I don't know if support is like maybe like physical support, or is it like financial support? Because that's all going to determine, like maybe not the physical support is going to determine if you buy a home or not, but definitely whatever finances you have is going to determine that. So I don't know if this supportive housing is helping you with finances or not, but that will be a factor when you get ready to go buy a house, if you need their support to actually continue to pay, the rent or whatever it is. Because once you let go of that support, it's only going to be based on what you bring in with your own finances.
Great. Thank you so much. And they said that they understood, so that is perfect.
Good job.
Okay, it looks like Suzanne is answering this one, but since we're slowing down on questions, I'll ask out loud too. Can folks use Mass Dream funds to purchase points and reduce their rate?
Purchase points. So what Mass Dreams does, because the One Plus Boston and the one already gives an interest rate discount, the Mass Dreams is there to help bring down that payment, but on the backside, not really on that buying down more points. You know what I mean? To get your interest rate lower. The interest rate discount is what it is. It's going to be, but there's no plan to like be able to use this to buy down more points. Like that's not kind of how it works. But we're hoping to be able to increase that point discount in the future. But, again, that's still future conversations. But if that happens, you guys will be the first to know. Don't worry.
We feel so special. Thank you so much. We have some questions going back to Section 8. So would you be able to discuss the 4 lenders who are currently working with those Section 8 vouchers that you mentioned earlier?
Yeah, so the 4 lenders is going to be Needham Bank, Webster Bank, Cambridge Savings, and Eastern. I want to say I have 4 lenders, but I'll send you the list as well. And we're going to actually be putting a section on our website to address the Section 8 piece, because a lot of people are calling and are asking about it, and they want to be able to get into home ownership. Some people, might already be paying $2,100 out of their Section 8, and somebody else, in Section 8 is only paying $200. It's like they might just be like, I don't want the Section 8. I'd rather just go ahead. So there she goes. She puts it in Cambridge, Eastern, Webster, and Needham. Yep. I need to create an anagram for these 4 because there's only 4 of them.
It's okay. We can think of some rhymes, like how you had to remember all the planets. Another question on Section 8. How much does Section 8 cover of the mortgage payment, if this is something you're able to talk
From
about?
what I'm being told, it works the same as their rent. So the 30% is what they would be offering to help out. So whatever the percentage they would be paying for your rent would work the same for the mortgage.
Awesome. Thank you so much.
And the Section 8 program, just to give people an idea, the Section 8 program can be a little bit difficult to navigate because not all housing authorities is actually participating in it. Some of the housing authorities are only helping their housing authority at this time. And then there's some that might do some porting, but I haven't got a concise list exactly who's going to do porting or not. But I am narrowing down the list as into who actually is helping out. But one of the major ones, I'll tell you this now, that is helping their clients is Boston Housing Authority. And they're actually teaming up with the city of Boston to be able to offer up to $75,000 in assistance. So if you're able to get the assistance from BHA, plus you're able to access Mass Dreams, plus whatever down payment assistance else that could be out there that could be available, you could really get into this home ownership piece at a good level. You know what I mean? Considering everything that's out there right now. Yep.
Great. Thank you so much. And I know our questions are slowing down. We still have a few minutes. So I wanted to ask you, LaQuisa, hearing all of these questions and the discussion that's been happening, is there anything that you would like to tell the people listening right now or reiterate any points from your presentation that you feel like are the most relevant?
Yeah, so I always like to tell people that, home ownership, buying a home is probably one of the most important things that you can actually do. It helps to build generational wealth for you and your family. I'm a product of generational wealth. I've seen how it works. My mom bought a house in the 80s. Now she was able to take this house and buy another house. And now I had a permanent place to stay. I was able to go to school and not have to kind of worry about rent and different things of that nature. So it does help out being an actual homeowner and being able to invest this money into your family and into yourselves. So I would say just kind of during this time, be patient with yourselves. For the homeowners that are already on there, you already know, how important it is to be able to have a stable place for you and your family and a place that people can always return to, right? So like, because I grew up in my home and I lived in my home since 88, I was able to go to like South Carolina and then come back because I always knew that I had somewhere to come back to. So that's also some security for you and your family to know that, hey, yeah, I might move to Florida, but hey, my mom still lives at so-and-so street and I can always go back there. So creating that stability, being able to stay in the city, if that's something that you want to do, is going to be the most important thing. I know that a lot of people are saying, well, the affordables, they don't let you earn equity and and yeah, we understand that is not happening, but we're hoping that that can change in the future, that maybe there won't be as many deed restrictions, or maybe the deed restrictions only for a certain amount of time that allows you to be able to move off in the future. But those are just conversations that are happening. So it's like we kind of have to work with the playing field that we've been kind of given at the moment. So there are some affordables that are out there, but if you can buy a market rate and that's something that you want to get into, definitely do that, because then there's there's nobody holding your hand, right? Saying, oh, you can't do this and you can't do that. And whatever hard work you put in is what you're going to get out of it. So I would say just be patient with yourselves during this time, enjoy the ride, the ups and the downs, network as much as possible, continue to talk, tell people your passions, and enjoy this whole big first time home buyership roller coaster, because that's what it is. It's like an up and a down process. But I would just want to leave you guys with, just be patient with yourselves during this time and you'll get through it, and surround yourselves with like positivity and love and people that are going to support you through this journey. So
Wow, that was a great message, Lisa. I absolutely love it. This is exactly why the Office of Economic Empowerment reached out, because that is just something that is really important to us. But it seems like our questions have stopped.
okay.
And we're hitting a bit to that time of the day when we'll let people go to their next adventure or next meeting, perhaps. So I wanted to say thank you so much again, LaQuisa and Suzanne in the chat, for being here and answering these questions. And folks, if you have not left yet, definitely make sure to answer our exit survey so that we can make sure we get the best content for you. So thank you again, everybody. Thank you, LaQuisa, for making the trek to get here. We really appreciate it. And this was a great session.
Thank you so much. I appreciate you guys. Thank you for having me, and I'll be happy to come back, Jessica. We'll definitely follow up on the back end and figure out what you guys would love to do in the future, but happy to help, and good luck, everybody.